for MMFCU's Home Buyer Seminar. My name is Jackie Lopez, and I'm the marketing manager here at the credit union. Joining us today, we have a full panel of specialists whose goal today is to help you on your home buying journey. So we're going to start with Joe. Thank you, Joe.
Thank you. So my name is Joe Zampatella. I work at Members Mortgage Company, and we work with credit unions all over New England to basically give them a full mortgage program that accompanies the excellent service that people are used to as being a member of a credit union. We exclusively work with credit unions, so we understand the difference between being a member and being a customer, right? So as a member of a credit union, this is a benefit from your employment or from where you live in the community. And so you're expecting a certain level of expertise, a certain level of care when you're looking for any of the services that you're looking for. So my company, Members Mortgage Company, works with your credit union, with MassMutual, as their mortgage partner. So when you call in and you apply for a mortgage, you're going to talk to a licensed loan officer in this area. And that person is not only just the loan officer, they're also going to be the underwriter, right? And so what's an underwriter? Right? Everybody kind of says, oh, what's underwriting? Just picture it like you're going to buy a car, right? You go into the dealership and you're negotiating the price, and the person that you're talking to is that salesperson. That's the traditional loan officer that you see, right? And then when you make a bid, they write down on a piece of paper, they go walk in the back. That person that they go talk to in the back is the underwriter. Now, this just adds all sorts of bureaucracy to the process. It slows everything down. So from you as a member, you don't have the time, especially in this hectic real estate market, to wait for this pass of responsibility. So instead, we bring that manager right out to you. This person is a mortgage expert. This person is tasked with approving your loan. So all of the conversations that you have are going to be directly with that person from the day that you apply all the way to the day that you close. Now, this is very unusual in the lending space, right? In most places, there are going to be multiple levels of processors. There's multiple levels of analysts or support staff that you're going to deal with. For us, we want you to have that centralized point of contact, because the reality is that you can hold us accountable, right? When you go to Bank of America, you go to Chase, you go to Wells Fargo, you're never going to talk to an executive level person. You're going to talk to that frontline staff pretty much the entire time. For us, if you ever had a problem, because you're a credit union member, you have Members Mortgage Company on the hook and you have the credit union on the hook. So from a responsibility standpoint, you have so many people that are in your corner fighting for you to help you be successful in finding a home and buying. So I introduced myself. We also have Don Ruffini from Remax Connections, David Sherwood from Sherwood Inspection Services, and Donna Wexler from Bacon Wilson. These are the team of people that you're going to need when you're buying a home. It's not always going to be very clear if you go and read all the articles online exactly who you should be talking to, what kind of services that you're going to need when you're buying a home. So we're going to go over all the different steps, and we're going to go over all the different kind of players that you want on your side to be successful in buying a property. So this is the general outline of what we're going to be talking about today. Right now, I'm doing the introduction. Then we're going to go into the requirements of getting a mortgage. We're going to talk about different programs that may be available to you, kind of the benefits and advantages of each of the programs. We're going to talk about actually going and applying for pre-approval. Then we're going to bring in Don to talk about finding your next home. We're bring in David to talk about the home inspection process. We're going to bring in Donna to talk about the actual process of signing the paperwork and buying the home. I'm going to give you a little bit of market color at the end, and then if anybody has any questions or needs anything, we'll take Q&A from people online and people here. All right, so I kind of went over a little bit about Members Mortgage Company. We're a Fannie Mae seller servicer, which means that all of the decision makers are in-house. So again, when you talk to somebody, they're the person who's tasked with helping you get approved for a mortgage. We're also a Title II HUD lender, which means that we have programs that are government sponsored like FHA and VA. We have the ability to lend in all 50 states, and you can actually go out right through MassMutual Credit Union's site 24 hours a day, fill out an application, and you'll be contacted within 24 hours, but if you kind of fit within our risk tolerances, you can get an approval at any time of night, right? So if you go in at 2 o'clock in the morning, start an application, if you complete that application and you fall within the risk characteristics, you'll get an instant pre-approval letter, okay? And then again, like I said, you're going to be once you start that application, you're going to be assigned to a dedicated mortgage expert that's going to walk you from the first day that you apply all the way to the closing. On this slide, we're putting the contact email. So if you have any just generic mortgage questions that maybe you don't want to post tonight, you don't want to talk about your specific situation, you can email that 24 hours a day. That comes directly to me. My wife is going to kill me one of these days because I'm addicted to my phone, but it's the best way to get in contact with us for a quick answer. And then during normal business hours, if you call that number, the 866 number, that rings on our loan officer / underwriter hotline. So somebody will be able to pick up the phone, answer any questions that you have, help you fill out an application, or just give you general advice if you're not ready to fill out an application at that time. Okay, so when we're looking at qualifying for a mortgage, there's a set of rules that is published by the FHFA, right? So you more commonly known as Fannie, Freddie, or Ginnie Mae. These are kind of universal rules in the mortgage industry that everybody follows in order to produce secondary market eligible loans. So there's common misconceptions out there like, hey, you need 20% down. That's not necessarily true, right? When you apply for a single family or a condo, you can buy a home with as little as 3% down. Right? And if you're looking at the multifamily space, there's actually new updates in the market where as of January of this year, you can buy 2 to 4 families with conventional financing with as little as 5% down. Right? So that means the purchase price of the home, you have to contribute at least 3 to 5% of your own money into the transaction, and you can take out a loan for the rest. Every year, they analyze the prices of homes, and they come up with a conventional loan limit. This is across the United States. This year, it's the highest that it's ever been at $766,550, oddly specific loan amount, but that's what the number is this year. So as long as the loan amount is that $766,550 or less, you can put as little as 3% down. If you have less than 20% down, you're going to have private mortgage insurance. Now, the beauty of conventional financing is that, say you only have the 3% right now. When you pay your mortgage down to 78% of the original purchase price, that actually is going to drop from your mortgage payment each month, right? So it's a temporary, you don't need to apply for anything. You don't need to refinance. The servicer of your mortgage, which will be the credit union, will just automatically drop that premium from your payment. And a lot of people, their parents have told them, or the grandparents have told them, oh, you got to stay away from that PMI. The reality is there's such a heavy competition for private mortgage insurance right now that it's relatively inexpensive. So a lot of people say, hey, listen, I'm not ready. I don't have 20% saved up. I don't have 10% saved up. We can give you quotes. We have 12 different providers of mortgage insurance. And because credit unions are tax exempt, we actually have a specialized pricing through all of the mortgage insurance companies. So by working with a credit union versus a bank versus an independent mortgage company, you have discounts for things like mortgage insurance. Okay. In addition to your down payment, you're also going to have closing costs, prepaid items like your real estate taxes, your homeowner's insurance, and then escrows. All of these things are contributing into the amount of money that you need to bring to the closing. Right? And it's not always as simple as, oh, yes, it's going to be $5,000. Every home's a little bit different. Every timing of your closing is a little bit different. Something as trivial as the day of the month that you close could contribute to a couple $1,000s one way or another, how much money you need to bring to the closing. The beauty of it is once you apply for your loan, we can look all of this up and we're going to give you what's called a loan estimate that gives you the anticipated closing costs, the anticipated prepaid costs, and the anticipated escrows, so that you know pretty much from the day that you apply exactly the rough amount that you're going to need to bring to the closing. Okay, and then finally, interest rates. Everybody's so concerned about interest rates right now. It's a very hot topic because of how quickly they rose over the last 2 years or so. And the reality is people think, oh, listen, I have 800 credit. I'm always going to have the best interest rate. That's not necessarily true, right? Fannie Mae and Freddie Mac have a risk tiering method called loan level pricing adjustments, right? And depending on the characteristics of the borrower, the property, your credit scores, your down payments, your credit, all of these things are going to influence what's called the loan level pricing adjustments, which are fees that I get charged by the federal government when I'm originating a mortgage, right? And so in your case, if you have 20% down, right, and you have 800 credit score, there are going to be somewhere around a 1/4 point in adjusters, which may impact your rate by 1/8 or even 1/4. right? So the best thing you can do when you're looking at interest rates is to kind of look around at all of the different options and evaluate what the point structures are and what the nominal rates are. Because again, just because they put it on an ad doesn't mean it's available for everyone who applies. So don't just go out and look at LendingTree and find the lowest rate and apply there, because the reality is that that's not always applicable to your situation, which means talking to the lender early in the process before you have a house under contract is going to be beneficial for you in your rate shopping once you actually find that property. All right, so getting pre-qualified, I think a lot of people think that this is a much bigger deal than it is, right? The reality is what we're doing as a lender isn't rocket science. We're not engineers. What we're trying to do is we're trying to evaluate that you have at least the minimum amount of down payment required for that transaction. Okay, so if it's a single family, you can do as little as 3% down. If it's a 2 to 4 family, it's as little as 5% down. If you're in certain programs, you might even have to put as much as 25% down, right? But all of those things, we're going to require that you have at least the minimum. Your minimum FICO score is going to be 620 for conventional or 580 for government loans. Most borrowers have 3 credit scores. We're going to use the middle score of the representative borrower to determine your eligibility, right? So if you and your significant other are applying together and you have pristine and your significant other has horrible credit, the horrible credit is going to be the representative score. So it has to be over the 620 for conventional and 580 for government loans. The third item that is a little bit more nuanced is really what we're looking for to evaluate what you can afford. And a lot of people call me and go, Joe, what can I afford? How can I figure out what I can afford from a mortgage payment? And the reality is that that's not something that I can necessarily tell you, but I can tell you what I can get you qualified for, right? And the way that we evaluate that is we take the minimum monthly payments on all of your outstanding debt. So car loans, student loans, credit card debt, personal loans, just the minimum monthly payment, plus a proposed mortgage payment. Now, that proposed mortgage payment's an estimate, right? So if you're looking in certain towns or certain cities, the taxes might be a little bit cheaper. The insurance might be a little bit more expensive. So what we're going to do is take a representative estimate of what we anticipate your monthly mortgage payment's going to be, add again the minimum monthly payment from all your other debt, and then divide that figure by your before tax monthly income, right? And that ratio will approve at under 45%. And with reserve assets, you can actually get approved with up to 50%. Now, the reality for a lot of people is that if we're looking at before tax income and 50% of it's going towards your debt, I don't necessarily know you're going to be comfortable making that payment, right? So I think it's a smart decision to go look at your pre-qualified situation ahead of time with a mortgage expert so they can explain what your monthly liabilities would look like, including your debt profile with your other debts. And so you can understand from a cash flow perspective what is going to be anticipated of you once this house closes, because the last thing you really want is, I spent every dollar I could to get into this house, and now this payment is eating me alive. That's a very scary situation to be in. So again, go early, get pre-qualified, go through this with your loan officer, because this is where you're going to really get a comfort for the price range that you can afford, and it's really going to allow you to be a more aggressive bidder when that house of your dreams comes up for sale. Okay, so we really offer 3 major types of loans, right? There's all sorts of different loan programs out there. I'm going to touch on the 3 major that are going to most widely be used by borrowers who we're talking today. All right, fixed rate mortgage. It's the tried and true. Everybody's comfortable with it. There's 360 equal payments, and you know what your interest rate, you know what your payment is over the 30 years. This is still, even in this market, 70% of the applicants that come in still want a 30-year fixed mortgage, right? This is how you sleep with both eyes closed at night. This is a very common product, all right? Very recently, as rates appreciated and jumped, the adjustable rate mortgage made a comeback. This is not the 2006 adjustable rate mortgage, right? These loans are fully amortizing, which means that as you make your payment over the fixed rate period, it's amortizing just the same way a 30-year fixed mortgage would. Now, the trade-off is that you get a below market interest rate, but you lose the security of the 30 years of fixed timing. Usually it's somewhere between 5 and 10 years of fixed rate portion, but it still amortizes over a 30-year period, which means your payments stay very similar to a fixed rate product. Now, does this make sense for you if you find the house of your dreams that you know you're going to be in for 30 years? Probably not, right? But a lot of people, first home, they're buying a condo or they're buying a small single family home and they're living by themselves or they're living with a significant other that they're not married yet. This may make sense because this might be a 3 to 5 year plan or a 5 to 7 year plan, right? And in that case, taking the discount of the adjustable rate mortgage, especially how expensive housing has gotten recently, you could save $200, $300, $400 a month, which over this, the spectrum of 5 to 10 years could be tens of thousands of dollars in either additional equity that you build in your property or just money you put in your savings account. So from your perspective, you don't want to immediately eliminate the adjustable rate mortgage when you're applying for a loan. You just want to understand your options and look at it on an evaluative basis and say, hey, what's my plan for this house? How do I anticipate that, my payments are going to be going forward? And then in the end, if you're more comfortable with the 30-year fix, that's always going to be available. But again, make sure you analyze all the programs that are available to you. And then finally, the government programs, FHA and VA, these are insured by the government. These are programs that have a little bit more risk characteristics to them. A lot of down payment, a lot of people here, especially when they're first-time home buyers, that they have to look at FHA options, right? FHA options are good for people who have credit issues, right? Their credit scores are below that 620 limit. Their debt to income ratio that we talked about can be higher. That can actually go as high as 65% and still get approved. And then before, there used to be 3.5% for 2 to 4 families. That was significantly lower than conventional. Now the conventional has dropped down to 5%. It's still lower, right? So if you only have 3.5%, you can still get a loan on a 2 to 4 family versus conventional, you need at least 5% down. So again, there are so many options available outside of these program parameters. But as an individual, you want to familiarize yourself with the terminology, the characteristics of each of these loans, because in the end, you want to find a product that meets your financial goals, you can comfortably afford, and that you have a good understanding of how they operate. Okay, so what I urge everybody to do, well ahead of when you're ready to bid on a home, is I want you to go right onto the MassMutual website tonight, this weekend, 24 hours a day. Go to the mortgage section and apply for pre-qualification online. Right? You don't have to complete the application. Once you create a username and password, you're going to be assigned to a loan officer. Okay. And by getting access to that mortgage expert, you're going to be able to talk about your goals for the transaction, the different characteristics of your situation, what you're anticipating for your price range, what you're anticipating for your timeline, and that person is going to quickly be able to advise you on exactly what you need to do in order to kind of accomplish this goal. Now, the fear, right, is that you don't meet one of those characteristics. Now, a lot of people will wait till the last second before they figure that out. If that's the situation, then you've already put yourself at a disadvantage because there could be very minor things that you can sort out months in advance of you finding the home of your dreams. So, say you missed a credit card payment you weren't aware of, or there's a medical collection bill you weren't aware of. Your credit could be negatively impacted by that. And if you don't find that out until you have a house under contract, your rates and terms over a 30-year period could be impacted by that. Whereas, hey, you go out, you apply for pre-qualification now, one time, and then you get assigned to this mortgage expert who analyzes your credit report. We do a hard credit pull. And the reality is on a hard credit pull, a lot of people go, oh, Joe, that's going to negatively impact my credit score. I can't do that. You're right. When you have a hard credit pull, it is going to hit your credit. It's going to hit your credit score, and it's usually 1 point per repository, right? So if you have 780 credit, there's not a whole heck of a lot of difference between 777 or 797 credit and 800 credit, right? And now you have this peace of mind of understanding exactly where you stand financially. And then also, when you apply for mortgages, right? Yes, you have that initial 3-point hit, but then within 12 months, if a new mortgage appears on your credit report and you make the first payment on time, it actually is seen as a positive. You went out, you applied for credit, your credit was approved, and now you're seen as more bankable, which actually makes your credit score jump. And it's usually somewhere in the 15 to 20 point range. So yes, I agree you shouldn't go out and apply for pre-qualification with 30 different lenders because 90 points is significant on your credit score. But if you're pre-qualified with one lender, most likely you're going to be pre-qualified with a number of other lenders that all play by that same rule book. And again, when you're shopping for rates at the end, that's very simple. You don't need to apply with each person. You just call them and say, hey, I have this house under agreement. the price is 500,000, I'm putting $100,000 down, my credit score is 797. What's your rate? Right? And at that point, any loan officer or any lender that knows anything about lending should be able to give you at least a rough quote of what their rate and closing costs would be, and then you can determine if it's worth applying with them. Now, for all of you taking the time tonight, I know that everybody's very busy. We appreciate it, right? We appreciate you taking the opportunity to let us introduce ourselves to you. And so if you go and apply, this is good in perpetuity. So at any point in time, if you want to go apply for a mortgage, for pre-qualification, the first part is you're going to be putting in your descriptive information, your name, your birthday, your social security number. The second, they're going to ask you for $25 for that credit report. If you put in this promo code MMFCU, all in capital letters, it'll allow you to defer that and waive that fee, so you don't have to pay that as part of the transaction. And again, that's good at any point in time. So feel free to use it now, use it a year from now, use it 10 years from now. It'll still be working. But if you don't use all capitals, it will not work. Okay, so make sure it's all capitals, MMFCU. Okay, and I kind of gone over this one a little bit as I talk. Again, it's invaluable to have a mortgage expert advise you on your personal situation, right? The worst case scenario is that you go to Bank of America, they hand you a pre-qualification letter just because you called them that day. You go out, you get the house of your dreams under contract, and then you talk to that sales guy, goes, everything's great, everything's great, everything's great. You submit your documentation, and then the underwriter comes in and slashes your dreams, right? So we want to make sure that that could never happen to you, that when you find the home, you're almost certain that it's going to close. So by availing yourself to the loan officer, by going over these scenarios ahead of time, we are basically ensuring that you're going to be approved when you go to actually find a house and put it under contract. What I would strongly advise is that you are forefront with everything that you have going on, the good, the bad, the ugly, right? Because if we don't know about it and we find out about it, that's a problem, right? So we want to make sure that everybody is understanding their risks. And if there's anything that we are fearful that you're not going to be able to be approved with, we're going to document it on the first day, right? Before there's any home in question. We're going to verify, we're going to collect your pay stubs, your W-2s, your bank statements. We're not going to do it if you're not near any barrier that would make you ineligible. We're not going to waste your time from that perspective. But if there's anything that we feel could be problematic, we're going to address it first day so that you know exactly where you stand and you can be confident going into a multi-bid situation. Okay, and so this is kind of an interesting thing that a lot of people don't know. About 48 hours prior to your closing, right? So you've gone through, you got pre-qualified, we went through everything. You look great on paper. We approved your loan. The appraisal was great. We clear you to close. You meet with Donna, sign all, getting ready to sign all the paperwork. And then we call to get a verbal to verify you're still working. And we're going to pull a soft credit, not a hard credit. So it's not going to impact your credit score, but we're just going to look to make sure that there isn't any change to your credit position. Okay. So a lot of people will go out and buy furniture and they'll finance it. Or, hey, listen, I got a new house. I need a new car, right? Obviously. And so all of those things, just because you've been approved and you've been cleared to close by the underwriters, quote unquote, doesn't necessarily mean you're 100% ready to go. Make sure that all the way up until the closing date, you're very conscious about making all of your payments on time. You're very conscious about, not doing anything unusual with your money, not doing anything unusual with your employment. I can't tell you how many times I've had people, we call and say, hey, you call your employer and go, hey, is this person still active? They go, oh no, they left like 2 weeks ago, right? That's a very, very scary moment when you're within 2 days of closing. And the requirement is it has to be within 48 hours of closing. So it's not like I can do it weeks in advance. So if there are any changes to your financial situation, if there's any changes to your employment situation, again, be forthright with it. Make sure that we all understand. Because listen, if you get that job opportunity and they're making twice as much as you were making before, we don't want you to say no to it. Well, let's just document it, make sure that we don't have any surprises at the end. Okay, so now I'm going to pass it on to Dawn to talk about the realtor side.
Thank you very much. I'm Dawn Raffini. I'm with Remax Connections. I'm actually one of the broker owners of the company. We are licensed to assist in Massachusetts and Connecticut. I just kind of want to go over a little bit about what our roles are as realtors and just kind of walk you through a few things. There will be some documents that you'll be able to access after the session. We'll get it in a OneDrive folder for you. But as you start looking at real estate, you should know that there's buyer's agents and seller's agents, and agents can be both. So meaning if you are selling a house and buying a house, that one agent can represent you as a buyer's agent and a seller's agent. our duties and responsibilities in those cases is to give you advice, guidance, and counsel, confidentiality, account for all your funds, and all the good things that fall into that. Anytime you meet with an agent for the first time, whether it's at an open house or you sit down to talk with them about a specific property, they should be giving you an agency disclosure. That is not a contract. It's not locking you to work with them. It's just to disclose how you can be represented and what their current role is at that time. They should be going over that with you. And if it's an open house, they should have a nice little placard that says exactly if they're a seller's agent or if they're what's called a facilitator. If they're a facilitator, don't say anything in the house. Don't say if you like it. Don't say if you hate it. No. Don't talk to them about what your financing is, because they don't have any loyalty to anyone but themselves. So they can share any of your information, anything that's confidential, they can share it with whoever they'd like. If you decide that you're ready to work with a specific agent, they should, and most likely will now with some of the changes that we have, be asking you to sign a buyer agency contract. That contract does lock you to working with them, and it does go over how they get compensated in the transaction. And that's really important to understand. Agents don't work for free. We do try to get paid from the transaction, whether it's from the seller's proceeds or if it's a financed cost. But it's important to know how you're going to be paying your agent and how they're looking to get compensated. When you meet with an agent, you should be going over a few things with them. And again, until you've decided on an agent specifically that you want to work with, you shouldn't be discussing confidential information. You shouldn't be telling them how much money you have to put down, what kind of financing you're going with, any of those types of things. If you're relocating, because those can all impact how people will negotiate for you or against you. But when you do pick your agent, you do want to discuss financing with them, because the type of financing that you're going to get will impact what type of property you're looking for. If it's an FHA or a VA loan, there are certain qualifications that the house has to meet. So as agents, we're on the lookout for those things to make sure we don't get tripped up along the way. They're going to ask you what type of property you're looking for. Now that can mean style, location, number of bedrooms, bathrooms. So you kind of want to go into that meeting, and hopefully they're going to schedule a consultation where you sit down and go over all this stuff. But you're going to want to have almost like a needs wants list. And you can say, these are the things that I need to have, and these would be the great benefits. If I could get them, I'd love that. And when you do talk about location, as agents, we can't tell you if an area is good or bad. We don't operate in that realm. What we do tell you is like, there's 3 grocery stores within a mile, or the highways nearby. So if you have specific questions on whether the school system's good or the neighborhood's good, we encourage you to visit third-party sites that actually that's their wheelhouse and that's what they deal with. I tell people, call the police department. If they don't know the street or the address, that's probably a good sign they've never been there. And then for schools, to go on greatschools.com, that's all the things that they do. They evaluate, how much funding schools get, test scores, all those things that as a parent whose kids are out of school at this point, I don't look at those things. So as you're moving through the process, you're going to want to start to interview agents. So what you'd want to do is ask people that that have either bought or sold a home recently, who they would recommend. You can go to your realtor association and look online and see who they have available for agents as well. But once you find an agent that you're comfortable with, really you should stick with that one agent. Because what ends up happening is that agent is now, again, going to be contracted to work with you, and their job is to work on your behalf. They have very specific duties and responsibilities to you as the buyer. They're going to go out and try to turn over rocks to find houses if there's not anything that meets your needs. They're going to network with their colleagues to find out if anybody has something coming. I personally look at things that didn't sell from like a year ago, and if it matches, I'll call the agent and go, hey, do you think your sellers still want to sell? I might have a buyer for it. So we're constantly trying to do things to get you to your goal. If you do try to work with more than one agent, it's going to be a hot mess all over the place. So don't do that. So again, as we move forward to the next slide, the questions that you want to start thinking about as you move through this process is, what type of house are you looking for? And again, that can be style. Do you want 1 floor or 2 floors? Do you absolutely hate, a specific kind of house, like a raised ranch? Or do you not want a cape that doesn't have dormers because the roof on the second floor, the lines are too tight? You know, and if you're 6'2", good luck, you're not using one of those bedrooms. You know, where do you want to live? What towns? What do you want to be near? Those are all important things for us as agents to help you hone in on a good place to call home. If there's any special requirements that you need, you know, I work with people that are like, I really want chickens. So now when we're starting to talk about towns, I'm going through bylaws and zoning and seeing like, can you have chickens in Springfield? Can you have chickens in, you know, like Belchertown's right to farm. You can have just about anything in Belchertown, you know, but Springfield, not so much. You're not getting a horse or a cow or probably anything bigger than a chicken. You know, other considerations that you want to think about are, you know, what type of property are you living in now and how is that meeting your needs? How's the square footage working for you? Is it a property that you plan on growing a family into? Or, you know, do you want to have, again, additional space at some point? Maybe you want to run a dog rescue. You know, those are things that we look at as well for you to try to give you the best advice and guidance. Things to not worry about so much. And I wish HGTV would do a whole series on unimportant things to look at in a house, like wallpaper, paint, the ugly 1970s kitchen. Those are things that you as a buyer, if you get the location you like, the square footage you like, the house itself overall has what we call good bones, which Dave will talk about a little bit more. You know, we don't look at the aesthetics as something as a detriment to a property in the sense of, if you're buying it, being able to be the one that picks the upgrades and put that sweat equity into it, you can get a much better return on investment in what you're purchasing than if somebody came in, put in a brand new kitchen with white cabinets that are contractor grade, you know, dark Corian countertop and some weird tile floor that you're like, I can live with this for now, but I really wish I had, you know, cherry cabinets or something else. You're better off putting that in yourself on the front. On your own, as opposed to paying a premium for something somebody else already did. I will say that this does talk about taking notes on properties. Please do that when you're looking at them. Because as an agent, I can go into, you know, 20 houses in a day and they all look the same to me, but there's always one key factor of each property that I remember, like the smelly house or the Pepto-Bismol bathroom house. There's always something that will trigger for me that property. So figure out what triggers it for you. That way, when we're reviewing them after, you can be like, oh, no, this one had the weird driveway or whatever it is. So you know why you didn't like it. Taking photos, if it's something that you want to do, let us know ahead of time because we do have to get permission from the owner that we can also take photos or video. Scheduling a second showing is always nice if we can do it occasionally, depending upon the market conditions, the type of property and the price range it's in. Sometimes we get one shot at looking at it. So not to be the person that pressures you, but you'll be told that up front. Then once we find the house that you love, there's some things we have to talk about. So some of the stuff that we already kind of addressed is, you know, how much money are you putting down? These are things that make people a little uncomfortable, but we have to talk about them. When we write that offer, there's a lot of components that we put in here. Inspection contingency, I will always, even in COVID, I never had a buyer waive inspections. I highly encourage you to have a home inspection, if for nothing else, to know how the house works. It's not necessarily to be able to renegotiate with the seller, but it is to know what works, what doesn't work, what needs maintenance, what could you improve upon easily. You know, Dave's going to go through all of those components with you. And it's, again, it's your walkthrough manual of how to use your house. I know that sounds silly to say, but it's literally a thing. You know, your mortgage contingency, those are things that we're going to talk about based on how your pre-approval's written. How much time do we need to clear all of your conditions for your loan to make sure that we're lined up right for closing? The average, you know, could be 6 to 8 weeks. Sometimes it's actually 4 to 6 weeks. So again, those are questions that we'll be asking the loan officer on the front side before we write an offer, so that we know what we're putting in for terms are things and conditions that we can meet. If we make an offer and this, you know, let's say, and this does still happen, I don't want to say it doesn't, but we make an offer under asking, and the seller comes back to negotiate with us. Like, that's a great thing. The door is still open, we get a second chance to make an offer. Sometimes we don't get that chance and we're only going to have one opportunity. So that's why we want to know all of these things up front of what's going to go into this. once our offer gets accepted, I won't say if, because the goal is to always get something accepted. Sometimes it takes a little bit of time, but once we do get that offer accepted, we're gonna have purchase and sale drafted, because Massachusetts is actually a two-step state. Connecticut is one step. So if you're buying in Mass, it's a different process than Connecticut, but don't worry, we can help you with both. And we have your attorney review the purchase and sale agreement. They're gonna go through, because the offer in Massachusetts is 2 pages. It's not as in-depth as the contract. There's 5 pages to that contract. The attorneys are awesome, and they have their standard addendums that they add, and, you know, and they all have the same general flow for how they work with them. But they'll review it and make sure that nothing weird got put in there. You know, actually Donna and I are doing a transaction right now, and in the addendum sent over by the buyer's attorney, there was some language in there that wasn't actually part of the agreed upon offer. And so Donna, in her role as the attorney, came back and said, we've got to take that out. So, so those are the things that get handled on that part. But once we've got that offer signed, we have a weird clock that happens in this business. We sprint for about a couple of weeks to get a bunch of things done, and then we sit and wait, and the lenders are doing their thing in the background, and we're all just kind of hanging out. You guys are thinking about buying furniture, and I'm telling you not to do it till after we close. So, so once we've got that contract signed, we've got the appraisal ordered, usually after the inspections are done, to make sure that everything's good there and you're ready to move forward. So we do the appraisal, the lender's working on mortgage commitment. In the meantime, we're having you get quotes for your insurance, because you need homeowners insurance. We have you get your utilities set up and set to be changed over. The certificates are actually, depending upon which certificates we're talking about, we do get smoke certificates. Sometimes we need to get receipts for repair work. And once we clear all of those hurdles, then we get to what's called the walkthrough. And at the walkthrough, we're gonna go through the property and check to make sure that it's in the same condition that it was in the day that we were last in there. And that any repairs have been done, that we've got our eyes on them. And then we drive from there the same day to the closing. And then you sign, and I just get to sit there and watch. So, you know, I think now we're moving over to the inspections.
Thank you, Don. I appreciate
Yeah,
you
no problem.
going over all those details, because there's a lot that goes into it.
Yeah.
So at this point, as we go through this, you've gone to your lender, you've gotten pre-qualified, you met Don, you have a wonderful realtor who knows the market, who's helping you with everything, and you finally found that house, right? And you put it under contract, and you're going in through, before you sign the formal purchase and sales agreement, and you need an inspection to make sure that the home is everything that you were anticipating that it would be. So now David Sherwood from Sherwood Inspection Services is going to be able to talk about that process.
Yeah, so the first thing is to take out some of the misunderstandings around the home inspection and what it's for. Oftentimes people today will say, well, what if something isn't to code? There's no such thing on codes for used construction. It's only for when it's newly being installed. So codes are not applicable. And then you say, well, then what are you inspecting for? We're inspecting for how it performs. And what we want to do is take a look at how it's aging, how it's performing, and is it safe and operational? And then to teach you about the understandings of how it operates. Along with that, I think it's really important. Over the last 2 years, we've been feverishly working on a program. It's kind of like an app for how to care and manage your home over the years. So it's called HomeBinder. And if you work with us in doing an inspection, you'll get a HomeBinder. And the HomeBinder is a means in which you can care for your home. When is it time to replace that filter? When is it time to replace the batteries? What if there is a recall on a specific appliance that you have? How old is your water heater and how old should it be before you replace it so that you don't end up in the middle of Christmas and you have no hot water and you've got all your relatives staying with you? So this is the kind of thing that this HomeBinder will do for you. And it's extremely important to be able to manage it, or it help you and assist you in managing the home. So it covers you from a maintenance perspective all the way through. Now, not every inspection company is going to have that, but it is an opportunity for you to be able to manage that home. If you don't have that, how do you do it? Well, you got to start from ground one, and that is you need to understand where the house is today. What is its current condition, and what options do you have to maintain it over time or make upgrades and repair type items? This market that we have been in over the last few years has been a very challenging market. You've got 17 people vying for each house, and the sellers will take the bid that is the cleanest. And sometimes that means no home inspection. However, I'm going to tell you that we have never had so many calls every week that we do over the last couple of years as when people are waiving home inspections. We get these phone calls, well, I bought my house 6 months ago and I got problems. Well, did you get it inspected? No, but I've got a fire, or now I've got, structural movement. I got cracks in my walls. I don't know what's going on. Well, the better time to do is before you buy it, so you know what it is that you're purchasing. I get it. Everybody is vying for a house, but my job is to protect you and make sure you understand what it is physically that you are purchasing and how you can care for it. The next piece to that is it doesn't mean that you don't buy the house. What it might mean is, what steps do you need to do to take care of that problem, to make those repairs? If you have mold, how expensive is it to correct that? And why is it there? Most people think it's just corrective action. Well, there are things that could have been done to prevent it. And you're going to want to know that. And you're going to want to know what you need to do in the future. So that's the home inspection process. And understanding all of that is important. The next part is, okay, well, great. I agree with you, Dave. We need a home inspection. Now, how do I find an inspector? That's going to vary from state to state and area to area. Many states, but not all, will license home inspectors. And that's a great baseline to work with. However, their continued education process is minimal, meaning you need to get 10 credits every other year. It's not a lot for someone that needs to be on your side and help teach you about a house with the fast changing times that we have today, the different boilers, the different water heaters, the on-demand systems, the split systems, the geothermal systems that are out there. 10 hours just doesn't cut it. So I strongly encourage you to look at the amount of education they have. How often do they get continued education? Where are they getting that information from? So that's going to be important. You're going to need to do a little research on it. There's a couple of associations that you can look at and say, are you a member of InterNACHI? That's one. Or are you a member of ASHI, American Society of Home Inspectors? They're both very good. They provide different values to the home inspector and to you. InterNACHI is the largest association and provides a lot of technical information that is baseline and really very good. ASHI is the most highly rated and the hardest to get into. The exam is about 8 hours long. And if you burp during it, they're going to question you and you may not get your license. So very intriguing process in both of them. I think there's a lot of value in having both. So you can take a look at that and start to learn your inspection company and what they have to offer you. The other one is, do they stand behind their service? That's a hard one, but you can best tell by reviews and how long they've been in business. So for example, we started doing inspections in 1982. That's probably before some of you were born. But over the years, we have educated a lot of people about homes. Like myself, have done over 20,000 building inspections, both residential and commercial. And we've got a host of inspectors that are the same. So take a look at how long they've been in operation. And are they going to be there for you to answer your question? The idea of the home inspection is not for you to just have them there when you're buying the home, but have them there to answer your questions after you own the home for years and years and years. And now we're doing home inspections for children of people that I did home inspections for years ago. So once you've done that, the next thing is taking a look at that time frame. And the time frame in which you're doing an inspection usually is about a 10-day time period from the time that you schedule it to the time the inspection is done, till the time that you get your report and all your questions are answered. And if you have to get some quote for pricing, all of that is done. So plan on that time period, particularly if it's a busy time of the year. What's the busy time of the year for inspections? It's going to be from spring to fall. So right about now till about October is really a very busy time period. So make sure you're getting that in there. We like to have you there. A lot of people try and do it remotely, and you're not going to get the value out of it as you will if you're there. So I strongly recommend that you attend. And the inspection typically is going to take somewhere between 2 to 4 hours, depending on the size of the property and what's involved in it. Now, during the inspection process, there is the home inspection itself, which covers your structure, electrical, mechanical, meaning HVAC, and plumbing. There's some other parts to that, meaning insulation and ventilation, that's part of the structure, your roof, which is part of the structure, and exterior envelope, and so on. That's the framework of a home inspection. People say, well, I thought the termite was part of it. No, the termite is separate. You can choose to do it or not do it as part of the home inspection. There's well testing. There's water quality testing. There's septic inspections. There's chimney scoping and chimney inspections, radon testing, and on it can go. The best way to understand that is to go on, say, our website and look at all the options that you have and start to take a look at how do you want to best be protected. And that's how you go ahead and determine what you want to have inspected. Because the whole inspection process is a risk tolerance deal, meaning how much are you willing to risk as you buy this house without proper information and guidance. The more people that we see today, the more inspections and ancillary inspections they're doing. So I think that's important. The next part is the reporting system. They come in two forms, narrative and checklist. I don't know too many people that do checklists anymore. There isn't enough value in that. What you really want is a combination kind of checklist for you to hit it with your eyes and see what's going on, but it needs to be narrative in the sense that it tells you in detail what the problems were or what needs to be done with it. And most of those are all computer driven today. So they've got pictures, some of them videos, so that you can work right through it off the computer. The inspection is not a warranty. However, some companies will have a warranty, like we have a warranty. If you're not satisfied with the inspection, by the time you're done with that inspection, we'll not only refund your money, but we'll pay for another inspector to come out there and do that inspection. That's how certain we are that you'll be fully satisfied with the inspection by the time you're done with us. So that kind of warranty is available out there, but you can't get a warranty on the house and the components with the inspection itself. That's not allowed by most states. That doesn't mean that you can't then purchase it, but you can't get that from the inspection itself. You should get a full detailed inspection report itself that should be able to help you. And then, of course, the inspection company should be able to be there to back it up and teach you anything that you need to know about the house. I think that's it.
Thank you, Dave.
Yeah.
Okay, and so we've gone through, again, you're gonna get pre-qualified with your lender, you're gonna identify your realtor. Now you've gone and you've had an inspection done on the property that you have under contract and you're happy. And now you're ready to move on to the formal agreement, the purchase and sales agreement, at which point we're gonna put you in contact with an attorney. So Donna Wexler from Bacon Wilson.
Thank you. So what Joe just described, sometimes what I like to recommend, as most of us have recommended from the beginning, is that you contact all of this team that we've described to you when you've decided to look for a house or when you've identified the house. But this is your team. You've got your lender, your realtor, your attorney, and your inspector. And it's important to have all of your questions answered up front and have all of that information when you start. So oftentimes we are involved and should be involved even before you go to the inspection. So Dawn described the documents that you're going to sign up front, the offer and the purchase and sale agreement. So we're generally involved right from that. If you haven't called us before and talked about the process, Dawn will let me know that she's working with someone who would like to work with our office, and we'll have the purchase and sale agreement sent to us. Dawn mentioned what that included. That's a contract. Any of these documents that you're going to be signing are contracts. So it's important that you understand that you're agreeing to do something and that the people that you're signing the contract with are obligated to do something as well. So it's important that you understand them, talk to the attorney about any questions you have. The loan disclosures that Joe mentioned are documents you're going to get up front from the lender, describing those fees, describing the interest rate. A lot of times I'll ask a buyer to send that to me also, because the question always is, how much money is this going to cost? So it's important that everybody's on the same page with the figures, with the process. So again, get your attorney involved from the beginning. So all of those documents, again, any questions you have, if you feel comfortable with them, you don't have to have an attorney involved, but definitely before you sign a purchase and sale agreement, talk to your attorney. So as we just discussed at the onset, the attorney reviews definitely the purchase and sale agreement and often the offer if you are not comfortable with signing that before it's submitted to the seller. Dawn described the differences in Connecticut and Massachusetts, and our office does work with buyers and sellers in both those states as well. The process is a little bit different with the initial contract. But again, get the attorney involved from the beginning. There are provisions for attorney review in Connecticut as well. So once the contract is signed, we've gone through all the other things we've just talked about. Dave's done the inspection, you're comfortable with the inspection, and Joe and the credit union are working on your loan. We all sort of work on parallel lines. I think Dawn gave a good example. There's all this hurry up and go, and then Dawn's sort of sitting back for a little while. Joe and the credit union are working hard on the loan, and our office is in the background doing our due diligence. So what we do is we obtain tax information, we do a title exam, we order what's called a plot plan if we're in Massachusetts, because we want to see what the surveyor sees when he goes out to make sure that the property, all the buildings are within the lot lines. So we're working behind the scenes, ordering all of that. We want to make sure that what you buy has good title. There are no liens that haven't been disclosed, or we find out about them and we know that we're going to pay them off, that there are no issues with the municipality in which you're buying. So we're going to make sure taxes and all of the utilities that are provided by the town are paid. We are also still in the background doing all of this. We're reviewing the title exam for all of those issues. We are working with the realtors. We are working with, if we're representing a buyer, the seller's attorney's office. There's a lot of communication that's going on. And again, I say behind the scenes, but there are a lot of just logistical things that as a buyer, you don't need to be bothered with. And then we're involved with coordinating the closing, preparing paperwork for the closing. We're working with the credit union and with Members Mortgage, who is providing those loan documents to us so that we can get those prepared and ready for the signing that you're ultimately going to do. We work on all of those figures. So Joe discussed in the beginning what all of the credit or all of the closing costs are and all of the fees that go into the closing. We are working those through on within the paperwork and sharing that information with you so you know what you need when you ultimately come into our office for closing. Once all of the documents are signed, we record the deed. The deed is what puts the title into your name. That's the transfer of the property from the seller to the buyer. And we record the mortgage at the Registry of Deeds. And recording is physically, those documents are scanned, they are posted on a website, and they become public record. So that's the recording process. We also prepare title insurance, which is, we could have a whole seminar on that. So I won't go into great detail with you, but that's something that a lender's going to require. They're going to require insurance on the title. And then there's also title insurance, which is available for an owner. And that's insurance. That's exactly what it is, insurance on the title. So if there are defects in the chain of title that aren't discernible in a title exam, you're protected for the entire time that you own your house. If once you start the process, you'll get a lot of information about that, a lot of disclosures. And we can go into more detail at that time. So what you're responsible for as the home buyer is doing those home inspections, attending the home inspections. I can't echo enough what Dave said. It's so important to have a home inspection and so important to be at the home inspection. Just as Dave's been receiving calls for the last several years after people bought and waived home inspections, so are we. So it's a tough lesson. The lender, again, Joe talked about all the information he needs in order to process your loan, or his underwriter needs. You have to stay in communication with everyone. Providing the information upfront in a timely manner makes the process very smooth. So that's something that you need to do. Communicate with your lender, your realtor, your attorney. Just keep us all, if you're going on vacation in the middle of this process, which at least 50% of buyers do, right? You need to tell us. You need to tell all of us, because that could slow the process down. And we have somebody who was traveling in Australia and we didn't know why they weren't responding to us. So that slowed the process down. So that's very important. And then ultimately you're going to attend the closing, which will be at your attorney's office. And that's when you buy your house. There are some states which are doing virtual closings now. In Massachusetts, we still need wet signatures. You still need to be in front of a notary. And a lot of the documents that you're going to be signing need to be notarized. But we're still at that point, as is Connecticut. So those of you in this general area, ultimately you're going to your attorney's office and having that closing. So a few days before the closing, you're going to receive from your lender a closing disclosure, which is going to, at least 3 days before, you're going to receive that, and it's going to show you what all of the costs are. It's going to look very similar to that loan estimate they gave you in the beginning. What's going to be added to that are adjustments that we make for taxes. If the seller has paid taxes in advance, you're going to reimburse the seller for taxes. There are some towns where you may be paying water up front. That's usually not the case, but there are water, sewer adjustments. If the house is heated by oil or propane, you're going to reimburse the seller for that oil and propane in the tank. And all of those fees are added to the bottom line of what you're going to need to bring on the day of closing. But again, those are all going to be discussed with you a few days before closing. You're going to arrange with Dawn to do your final walkthrough. And that's when you go back through the house, make sure nothing's been damaged since the last time you were in there. And then you're going to come to our office and sign those documents for closing. What you'll need, we talked about what the money that you need. you'll need to bring that money to the closing, either in a certified check or arrange a wire. If you're working with a credit union, they are really good about helping you wire funds, if that's an option you choose.
All right. Yeah, that's big.
That's you.
Yeah. All right, Donna, thank you so much, right? So now we've accomplished our goal, we've closed, you own a home, right? And so it seems like there's a lot of moving parts. It seems like there's so much complication. The reality is you want to have a team that understands each other and how they work, right? So Donna and I have been doing close for, I don't know, 20 years probably. And so she understands my process, I understand her process. So having an attorney, when you're kind of analyzing your attorney relationship, you want to talk to your lender ahead of time and see who they have on their list of attorneys. Not every attorney can represent every lender, right? And so the reality is that you and I are basically buying a home together. You're going to buy X% and I'm buying the residual, right? So when we have an attorney reviewing all this documentation, both of our interests are going to be aligned. So it's a great way to save somewhere between, I don't know, $500 and $1,500 is by asking your lender who their attorney is. And then it just cuts down on the potential of miscommunication, right? We're all on the same page. Donna knows exactly what I expect from her, what I need in my closing, packages so that I can get you accurate information. I know exactly what she needs from me to make sure that I send it all over so that she can open up a clean file and order title and get everything done in a prudent manner. So we want to make sure that everybody's on the same page and that, again, we're all working as a team here because the teamwork aspect of it is what's going to make it seem like it's so easy for you as a buyer. The people who say, oh, what a horrible experience that was, is usually because there's miscommunication, there's bureaucracy in the process, and there's a lot of inexperience that goes into it. We were talking earlier about how, time in business is really an important factor. We've been doing mortgages in the credit union space of New England since '94, right? In the last 3 years, I've done 1.6 billion in first mortgages for credit union members just in New England. So it's an area where we're experts. You want to deal with experts who are experts in not necessarily just what they do, but in the area that you're working in. Bank of America can't be an expert in every real estate market, right? JP Morgan Chase, they're very good at, deposits, who knows? But they're going to be this national conglomerate. They don't know the specialized Springfield market. They don't know the specialized area that you're in. So you want to find somebody that's local to your community that is an expert, especially when you're talking about realtors, inspectors, attorneys, right? And then from a lending perspective, I've beat up my attorneys. I've beaten up my appraisers so that the fees are low because of a promise of volume. Okay, so all these other attorneys that are working in this area that don't necessarily work with your specified lender, they're trying to hit a home run in every transaction. Donna knows that I'm going to get her more files, so she's willing to make a little bit of money. She doesn't need to make a ton, so my closing costs are going to be a little bit better, so that as a credit union member, you're getting lower closing costs than the commercial bank that you were looking at or the independent lender that you were looking at. So make sure you utilize it. This is a perk, right? This is a perk of being a MassMutual employee, right? So you want to make sure that you understand the value of a membership. And right now, some of you might not even be members of the credit union yet. Open up an account. They have great deals on things like car loans, credit cards, home equity lines, right? I'm not just here to talk about mortgages, but you want to make sure that you understand what the value is of being a credit union member and how you should be treated in any sort of transaction. So avail yourself to the credit union early and often. It's a great way to save some money, first and foremost, and also have a banking relationship where people know your name. You're not just, number 10,147. Okay. So before we end, I just want to give everybody some market commentary on interest rates, on housing supply. So it's a very interesting time, right? We're going into an election cycle. Traditionally, election cycles happen to be a good time for interest rates. Not to get too political, but incumbents don't like to have consumer debt be very expensive while they're trying to be reelected. So pretty much every analyst that you read it right now is going to say that interest rates are coming down over the next 6 to 12 months, conveniently timing the election, right? And so at the end of the year, 30-year fixed mortgages were at 7.5%, something like that, which was a 30-year high, right? 30-year high, you're thinking back, we're getting back into the 80s, right? Where rates were higher than where we are currently. Now, they're anticipating rates are going to get somewhere into the high fives, mid fives. The difference between 7.5 on, let's just say a $400,000 loan. The difference between 7.5 on a 30-year fix and 5.5 on a 30-year fix is something like $535 a month, right? That's a huge amount of money if you're looking at the affordability. I mean, $6,000 plus per year on affordability if interest rates continue to climb down. Now, the difficulty with interest rates coming down means that demand is going to pick up, right? As interest rates come down, there are more people coming back in and being able to be qualified for a mortgage, which adds more competition, which is going to fuel prices to go even higher than we are now. So when rates were at 2.5 on a 30-year fix, I had more people call me and go, Joe, I'm going to step aside because these prices are ridiculous. They've doubled since then. Interest rates spiked and everyone went, oh, demise of the real estate market. Here it is. It's over. There are 10 buyers for every house that comes up for sale. I mean, we're watching the State of the Union address where we're talking about inventory gridlock because so many people are so comfortable with their 2.5% 30-year fixed mortgages that it's becoming more and more difficult to get those people to be motivated to sell their home, right? Because they have to buy something on the back end. So even if they're buying it in cash, it's still such a cost. So from your perspective, understand that prices, especially in the Northeast, there are a lot of employers up here. Right? You're not going to see the fluctuations that you're going to see in Arizona and Florida, Nevada, where they ebb and flow 20, 30, 40% with markets. Up here, really, there's not very much that's going to make even a double-digit move. The Northeast during the Great Recession in 2007, 2008, I think that they lost somewhere around 7% in value. Right? And then within a short amount of time, they were off and running with double-digit gains. Okay, so don't anticipate a great demise. Don't anticipate this windfall of supply. Understand that the competition is going to be fierce. So you want to line up your team, make sure that they're local experts. You're going to be prepared to move quickly so that you can attract the seller to entertain your bid. A lot of people, they talk to me about, writing letters and, flexible closing dates and, differentiating your bid slightly. And all of those are great tools when you're bidding on properties, but there's no secret that cash is going to be king, right? So what you need to do is make sure that you can compete against people who are bidding cash by having your lender prepared, having your agent understand exactly what you're looking for, having your attorney lined up so that they can get the contract signed quick and effectively, and having your inspector signed up so that they know that, hey, listen, I went under contract on Tuesday. I need you out there before Friday. We are going to sign P&S the following Monday, and we're closing 2 weeks after that. Okay, that's a quick timeline for a lot of people, especially for a first-time home buyer. So talk to your lender, talk to your realtor, talk to your attorney, and make sure that everybody's on the same page about what you're comfortable with, and then adjust yourself accordingly. Listen, there's going to be homes. Homes are always being bought and sold. It's not like we're going to get to the point where there's nothing for sale. I can't imagine inventory is going to get any less than what we've seen over the last couple of years. So I am hoping that, as we move forward in this housing market, there's going to be a little bit of gridlock break, and that there's going to be incentivization, if that's a word, to list your home for sale. And so be prepared now. Right? You're not going to see 30, 40 listings a day. You're going to see 3 or 4. Go out, go on Zillow, go on Redfin, Trulia, Realtor.com, whatever it is that you want to use for your technology, and just set up alerts in areas that you're interested in. And it might be counties, it might be specific towns. Hell, it might be a neighborhood, right? That you're only looking in this one neighborhood. And when a house gets listed for sale there, look at the characteristics, look at the price tag, look at the timing, right? If you're not ready to buy right now, look at how quickly it goes under contract. Look at how quickly it becomes, transacted on and it closes. Because all of this information is going to make you a more qualified buyer. It's going to make you somebody that is better prepared to purchase in the near future. And again, you don't necessarily need to go out and get pre-qualified the day that you're ready to make a bid. It should be 30, 60, 90 days before you're ready to make a bid so that you can organize your team around you. Okay. A lot of people have said, oh, listen, they're going to be dropping rates in the next couple of months, so I'm not going to do this now because, they're already telling me they're going to drop rates. If that's how it worked, we'd all be millionaires, right? We'd all go to the market and use, the finance people would work with us to make millions of dollars. The Fed funds rate is not an indication for traditional U.S. mortgages. The 30-year mortgage most closely tracks the U.S. 10-year Treasury, right? So if you're ever going, hey, what are mortgage rates doing? You don't have to go around and look at every lender because that's kind of a smattering and it's hard to really digest everybody's loans next to each other. Watch the 10-year Treasury. You can go to any finance website and watch it. When that's going up, mortgage rates are going with it. When that's going down, mortgage rates are going with it. So keep track of that as a finance metric. You guys all work at MassMutual. You're going to be finance people in some way, shape, or form. So get that on your traditional news feed, keep track of it, just so you, again, you're just building up this skill set of understanding what's going on so that when you're ready to negotiate on things like the price or your interest rate or the closing costs, you can be prepared to make those decisions. And then again, understand your local markets, right? I'm talking about Massachusetts, I'm talking about Connecticut, talking about, New England, really. If you're in North Carolina, if you're in Colorado, if you're in California, you're in, Nevada, all of those markets are gonna have different structures to how things are done, different processes and procedures. Understand what those are so that you can form your team of people, right? I can do the lending in all 50 states, but Don's probably not gonna be a master in Seattle real estate.
Nope, but I have somebody I can refer there.
There you go, right? And so, again, you want to find that team for wherever it is that you are so that you're ready to hit the ground running, because unfortunately in this market, you're not going to have the time to analyze the way that you wish you would, right? So be prepared, get ready to run. It's a lot of fun. I used to have jet black hair. I know you can't see me right now. I have salt and pepper. It's stressful. It seems like it's going to be like a crazy, process. We'll walk you through it. We'll make sure that everybody is prepared so that you know what to expect, and then it will seem like an easy process. So when you go to your friends and go, oh no, that was no big deal. And they'll go, oh, for me, it was terrible. I couldn't get a guy from Bank of America to call me back, right? So this, again, at the credit union, you are not just a number, you are a member, and we will make sure that everything goes smoothly for you. Okay, so before we finish up too, let's go over just one more time the different steps, right? First and foremost, go out, get pre-approved, understand where you stand financially. You want to make sure that you have kind of an idea of what your need for documentation, what the process looks like, and talking to your lender is the best way to do that. From there, you got to make sure you get a real estate agent. Don's fantastic, but again, if you're in a different market than this area, make sure you have somebody that's qualified who can talk about the different spots of the market from there. All right, and then as you start to look at houses, right, you're going to go out, start looking at open houses, get an idea of the market. You're going to find a house, and at that point, you're going to contact your attorney and your realtor, and you're going to write an offer. You're going to negotiate, and then from there, once you have a signed offer with a determined closing date, that's when you can contact your lender to discuss your rate options, right? You cannot lock your interest rate until you have a house under contract with a determined closing date. So as the market moves, you're going to be moving with it, right? Up or down. Then once you have your rate locked, your lender's going to order an appraisal on that property. At that same time, you're going to be contacting an inspector to go out and view the property with you, determine the condition, right? Then everything looks great. You're going to go and you're going to sign the formal document, the formal contract, the purchase and sales agreement. From there, you're going to submit that purchase and sales agreement to your lender. The appraisal can then be completed, right? We're going to collect all of your documentation. Once that formal contract is signed, we're going to get all of your loan approvals taken care of. We'll give you what's called a commitment letter or a clear to close. At that point, we're going to refer you over to Donna to set up your closing. You're then going to meet with Don to do your final walkthrough, and you will be at the closing table before you know it with the keys in your hand and a new proud homeowner.
Awesome. Thank you, Joe. Now, at this time, if you have any questions, feel free to put them in chat. We do have one from Remedio, which I do believe you touched upon after he asked, but do we get any better rates or any type of benefit as a MassMutual employee?
Yes, so traditionally, and I'm not going to say necessarily that, oh, I'm always going to be the best rate, right? That's a unrealistic expectation that our rates are always going to be lower than every other lender out there. There's certainly thousands of lenders. But what we do is we traditionally have been in the lower tier of loans because we're a credit union, right? We work for the people. And so we don't have to pay, people don't know this, credit unions are tax exempt, right? So we don't have to pay taxes on our income. So we don't need to make as much money. So what we're trying to do is pass that savings on to our membership by discounting our interest rates and offering other, benefits of banking at our credit union. So from your perspective, you're going to see discounts on things like adjustable rate mortgages, or you might see, significantly better interest rates on 30-year fixed mortgages. Right now, the average 30-year fix is at 6.94%. My marketed 30-year fix is at 6.375. Right, so it's roughly a 0.5% difference between what I'm offering and what the average lender is offering. Now, that being said, who knows what other lender has a discounted loan out there that could be crazy. Again, don't trust LendingTree. Just because it says 3.75% on a 30-year fix does not mean that it's available. And comparing rates is not always an apples to apples comparison, right? I can offer you 5.5% with $30,000 in closing costs too. I don't necessarily know that that's the best product for you, but make sure you evaluate not just the stated rate, but also the cost to obtain that rate, right? Because it's not always going to be as clear cut as, oh, I went on this website, I went on this website, I went on this website, because people play games, and especially the more aggressive independent lenders do a lot of things where they try to catch your eye, reel you in, and then, you know, kind of change the deal once they get you the hook in you. We're not that way. We've been doing this for 30 years in the credit union space because we want to build a 30-year relationship with you. It's not about one transaction. It's about helping you buy a home, your next home, your future home, and then getting you the best rates and terms that we can.
And also along that line, you mentioned, you touched on the fees. So there is as credit union members, the fees are lower for the closing.
Mhm.
So the attorney fees, the total of the fees is significantly less than if you went somewhere else outside, if you were not a member. So
Agreed.
that is.
I'd like to put the interest rates in perspective, because I know a lot of people get uptight with the interest rates where they are compared to where they were. My first house that I bought in 1980, I paid 18.75% interest, and I was excited to get that low of a mortgage. So, you know, we've come a long ways, and so in perspective, you know, 6.5%, 6.75% is not bad compared to 13 or 18, and it may not be where we were a few years ago, but it's still very good rates.
Yeah, just again, a little bit of more perspective on that too. The rates that we're at right now is really about the average that we run as a country, right? And during COVID, we had an artificially underinflated rate because they were trying to continue getting the economy going and things like that. And there were a lot of factors that went into why the rate ended up where it was. So for people to think that, well, that should have been the norm, it's really just not. And again, just another little bit of perspective is the United States is the only country that has a 30-year fixed mortgage, and we're not required to refinance it. We can refinance it whenever we want, whereas in Canada, they require you to refinance that mortgage regularly, right? So you could have had a decent rate, but then, you know, now it's time for you to refinance and you have to. So, you know, don't get too hung up on the rates because they change all the time, and you know they honestly change daily, and not a huge swing, but they do adjust every day. So, just because you have a rate that's a little bit higher than where you want, there's ways that you can buy it down a little bit if you've got a little extra cash, or that's something we negotiate with the seller, that they do some closing cost concession to buy that rate down for you. So there's a lot of different things we can do. Don't get too hung up on the rate. Find the house you like first. We deal with the rate second, as long as you can afford the house you want to buy, right? Like that's really what it comes down to. Look at that monthly payment, because rent is sky high right now.
And I just want to mention, my son purchased, our son purchased a home last year. And he's younger, so he has all the stuff in his mind and his head. Is it the right time? Prices are gonna go down. I think I'm making a mistake. And, you know, we talk him through. He's very happy now because prices keeps going up. He said, oh my God, I thought I bought it at the highest.
He thought he bought it at the peak.
Yeah.
Yeah.
So it keeps going up. So now he looked at the other house and he said, wow, I'm already, you know, getting, you know, my prices have gone up. So his house gone up more than 50,000.
Right.
You know,
And that is another factor too. If you're not a homeowner yet and you're afraid to do it because you think it's going to be too expensive, take a look at what your wealth looks like as a renter versus a homeowner. Right now in the United States, the average renter, their wealth is about $5,000, whereas the average homeowner is about $400,000. It's a big difference. And getting into the real estate market, even if you want to get started with a small condo, you're going to build equity there. You're going to build wealth that at some point you can turn that over to the next property, or you keep that condo as a rental. Right. And, you know, as long as you can rent it out, now you have an investment property and you can buy a house. And that investment property can help you qualify for another property, you know. And so there's a lot of different ways you can do the multifamily to get started, but it is about getting started in the real estate space.
So, Joe, you mentioned look at how quickly homes go under contract. And I don't know if it's a question more for the real estate agency and the inspector, but what's some feedback that you can give for that in regards to homes that have been on the market for a really long time? Like, is it better to kind of focus on those because maybe you can negotiate a better deal or?
I would answer that in the space of it depends, and I hate to say that because sometimes it's sitting on the market for a long time because they're just overpriced. And people who have been looking for a house for a long time, they are on all the apps, so they see everything that comes on. And they know whether or not that property for its condition and what it offers, if it's priced in the right range. And sellers, I hate to say it, they're still overpricing their houses. So it does happen. So if you see a property that you're like, God, I wonder why that's been on for 60 days. Give your agent a call. We can usually look at it really quick and tell you, well, it's $40,000 overpriced. They were shooting for, last year's bidding wars that aren't the same as they are right now. Or it might be there, it could have a failed septic system that you're, as the buyer on the website, not seeing that. So there could be various reasons why it sits for a long time, but I'm always from the space of, if it's overpriced and you like the house, we'll throw a low offer. I don't care. I'm not gonna get offended. We didn't price it, so.
The other thing is I noticed as an inspector, the number of people that shy away from a house because they don't like the color of the paint of a particular bathroom. It's not modernized. Well, in my day when we bought houses, that's what we wanted, to put our own influence, our own touch into it. And
Yeah.
so I think, as Dawn had said earlier, try to not focus so much on the cosmetics. The cosmetics are usually a lot less expensive and not as hard as you would think they would be to get them done if you don't want to do them yourself, or to challenge yourself a little bit to step up to do that. So you put a little bit of sweat equity into the house. So keep that in mind too when you're looking.
Yeah, a lot of people are having painting parties now,
Yeah, I was
right?
gonna say,
Yeah.
a couple
Like,
quarts of paint goes a long
literally,
way.
pizza, beer, 10 of your closest friends paint the whole house, right? And that's a great way to pay it forward to each other too, right? It's what people are doing.
And for people who don't swing a hammer for a living, I think that you really overestimate how much even minor, cosmetic updates will cost. Right? And so you're always, oh yeah, that's gonna be $30,000. And it's like, that might only be $6,000 or $2,000. Right? And it could be significant in the imagery of the home. Right? So I think that having a good inspector is helpful there, because usually inspectors have a background in the trades. And so they can kind of say, like, listen, if you're gonna do this, the estimated cost is X, Y, Z. Now, they can't do that when they're walking you through the house, but if you get in a relationship with the person and you can kind of have a frank conversation, you can get a ballpark of, is this a big deal or is this not a big deal?
Or you just might surprise yourself at
Right.
YouTube how to
Yeah.
do carpeting and hard flooring.
There you go. Exactly.
YouTube is great.
I was just gonna say,
It is.
YouTube, you can do everything.
Yeah.
YouTube University.
Yeah.
All right, we have another question. If I were to buy a property and 3 to 5 years later, I want to buy another property and move into it, would I need 20% for it?
No. So when you sign a mortgage, you're signing a document that says you're gonna live in that specified, well, if you're buying it as an owner occupant, you're signing a mortgage that says you're gonna live in the property for at least 12 months. Okay, after that 12-month period, you are no longer a first-time home buyer, right? Because you still own a home, but the minimum down payment as a repeat buyer is 5% for a single family or a condo.
Okay.
Okay, so you can put as little as 5% down on your second. Again, the same rules apply with mortgage insurance, the same rules apply for, the different transaction types may have different requirements, right? If you're buying an investment property, if you're buying a second home, down payments are not gonna be 5%, but each of those characteristics are gonna be, you'll know all that upfront when you're applying for your loan.
All right. Well, that concludes the questions we have on here, but if anyone on the call thinks of any questions at any later point, we have our email that's on the screen, and then we also have our mmfcu@membersmortgage.com that goes directly to our mortgage specialists. So thank you everyone for joining us.